city. I love the taste of the filter coffee and the take innovation. So I look forward to coming back to this city. Thank you so much, for your participation, and it's a privilege to be part of this particular session. Uh, the topic of this particular session, my friends, is the leap of the digital economy, exploring the impact of India's digital infrastructure on businesses and consumer behavior. Uh, Before I shoot questions to all the lovely panelists, I have 3 data points to share with you. Uh, the first is, how many of you eat biryani or order biryani? Very nice. Swiggy says every minute we order more than 150 biryanis in this country. So that's the power of digital. That's data point number 1. Data point number 2 is 10 minutes delivery is the unique model that India has developed, which doesn't exist anywhere in the world. Third data point is very much real, is this, that no matter how much we talk specifically about the startup innovation and the fintech, the funding winter still continues, and many startups and fintechs are facing challenges. In fact, if I look at the data, in 2021, we raised $8.3 billion. In 2022, we raised $5 billion. In 2023, we raised $2.8 billion. In 2024, downwards, we raised 1.98, which is close to $2 billion. So this is the story of digital economy. I will straightforward start with all of you. And here is the lady sitting beside me, ladies first, who has recently come from Switzerland by doing her ski on the ice. That's a great innovation that you did, perhaps. My question to you, Paroma, straightforward, is in your segment, in your business, what kinds of impact digital has created on your business, your consumer behavior, and the company?
Wow, loaded question to start this off with, and I wasn't expecting my introduction to be about skiing, but so there. The only analogy that I can draw is I hope the digital economy doesn't go downhill as we do in skiing and crash. Any which way, coming to your question about how digital has impacted behavior, let me take it in 2 parts, okay? One is what we see in terms of behavior of consumers on the product side, and on the other hand, let me also take the example of the behavior of employees working, because these are 2 aspects, both of which have really been disrupted by digital. First, if I look at the consumer side, there are 4 basic things that any consumer looks for in any product or service category, and all 4, the demand of consumers across all 4 dimensions has become more and more pronounced. The first dimension being convenience, the second dimension being cost and affordability, the third dimension being timeliness and time sensitivity, and the fourth being transparency or the need for more information. So on the convenience side of things, we've seen as Revolut, we are present in 44 countries in the world. And in most of in our core launch market of the UK, we actually launched as an e-money wallet, which is very much like a PPI wallet here in India. But that became a default account of choice for 20% of the population in the UK, which is phenomenal. So rather than going to a bank and opening a traditional banking account, particularly the young tech-savvy population actually changed their innate behavior to open a wallet account and keep their money there as a store of funds rather than a bank, and use that to make transactions and payment transactions. So that need for convenience of being able to fully digitally, in a digital end-to-end native manner, be able to onboard yourself onto a financial relationship and be able to do all the transactions that you need from there completely digitally without having any physical presence has been an innate change in behavior. We're seeing that phenomenon here in India as well, and that's what we're hoping to be able to serve here as we launch in India too. So that's on the convenience side of things. Second, on the affordability side of things, we have actually seen here itself, we would have been living under a rock if we didn't realize what UPI has done for it, right? The 14 billion transactions that are happening on UPI in a month has happened because it innately made it affordable for both the consumers and the merchants, one, to make payments that way, merchants to receive payments that way. And therefore, what digital has done by doing all this is set the affordability expectations at a very different level. So tech companies and companies who are providing products and services using technology, including us, have to work so much harder to make it more and more affordable for consumers. But we do have an inherent advantage. Because we don't have the physical infrastructure to pay for, we can actually provide the same products with the same manpower. I mean, not to take pot shots at anybody, but during the Champions Trophy, if you folks have been watching, there's been one particular bank that has been advertising about having 2 lakh employees who are there to serve you. And my 10-year-old son, when he watches it, he actually says, what do they need so many people for? But that's exactly what it is, and the younger generation so early on are getting it. The tech companies are able to actually deliver those products and services with much fewer people. So your inherent cost structure is much lower, therefore, when you offer it, and you're able to extend that pricing to consumers. So at Revolut, for example, on the Forex side of things, and I think we'll talk more with my co-panelists on that, but that is an area which traditionally has commanded a 3 to 5% margin while doing it physically. Because we're able to make intelligent use of AI that you've heard so much about, we can actually make transactions cross-border even more affordable for individuals and try and democratize that just like UPI has been democratized for domestic payments. So the affordability expectations has completely changed. Third, the time sensitivity, being able to have any product or service at your fingertips at any hour of day or night has become an expectation. Earlier, banking was an expectation during banking hours. Now it's no longer the case. Even for trades, there are trading windows, but people want to be able to place their trade at any point of time during the day. People want to be able to place their remittance request any time of day or night, regardless of whether markets are open in which geography, what time zone anybody is in. And they want things immediately. Like Amol gave the example of the 10-minute delivery. Even in financial services, we see that. They expect their account to get opened instantaneously, a transaction to get processed instantaneously. So even here at Revolut, we have actually put in a lot of effort to make the onboarding process completely digital and seamless and simple. It takes less than 20 steps, including data that you need to give, and therefore somebody can open up a complex financial relationship in about 5 minutes. So that's an expectation shift which has happened around time. And lastly, around transparency, with all the delivery apps showing you the name of the delivery person, whether that person's on the way to pick up your order, order has been picked up, order is on the way, using maps to show where exactly it is on the way. It has changed the expectation around being able to track how anything moves. And there again, within financial services, we've taken that insight to get the customers to track their money flow the way you can track delivery on the app. So that's the fourth dimension, which I think is getting debunked. And very quickly, I'm not going to dwell too much on it, but we're going to speak largely about customers. But on the employee side also, it has genuinely enabled remote first working and hybrid working, which has caused immense operational efficiencies without compromising on productivity, which some people had predicted may be the case. But with so many tools that are now out there which are getting adopted, which we have also, we're able to run a 4,200 employee workforce here in India in a remote first manner. That has become a reality as well, and that has changed the expectations of employees about their workplace. I think a long-winded answer, but you gave such a question that I had to share my thoughts compositely.
Sure. I think that was detailed one, and highlighted a couple of points. Convenience and affordability will stay with me. Thanks, Paroma. Nikhil, let me come to you, and at INDmoney, or in fact, even Ashish. So we have, I think, directly, we have crafted panel really well. एक पैसा उड़ाने वाला है, दूसरा पैसा invest करने वाला है, और दो लोग पैसे बचाने वाले हैं. So that's how it is. So at INDmoney, people are investing, quite aggressively into the market now, even specifically mutual funds and stocks as well. So what kind of consumer behavior that you are seeing specifically with digital infrastructure and the changes that is happening with the DPI?
Yeah, I think these days investments are a little lower because markets are falling. But so what we've been seeing is that digital is a force multiplier, right? So if you look at it, traditionally a customer, if he wanted to go and start investing, he would need to go to his neighborhood broker, go to some wealth manager, 1000 form fill karna tha. I remember that back in the day, it was 42 signatures you had to put to open an investment account alone. Today, that gets done in 5 minutes. You have Aadhaar e-sign, you have CKYC, you have KRAs that just do the entire job for you. So what that does for people like us is it helps us convert better. So every 100 people that come, a traditional guy would be able to convert maybe 2 or 3. For platforms now with these tools, it's 20 or 30. And it's a great experience for a user. It's instant gratification for a user. Hence, he's probably going to stick longer. And conversely, what that does is rather than putting, it democratizes the entire ecosystem. So instead of 100 people coming, now there's 10,000 people coming because it's so easy to access. And hence, you've seen it in our business in the last 6-7 years. Investing, or let's say DMATs, have gone from 2 crores to 20 crores. And that's just been facilitated by this rise of this digital economy and all of these digital services around. And then going back to UPI, which is obviously the game changer for us in the last few years, it just becomes much easier for you to accept money, much easier for you to give them money back. And then innovation keeps on happening. So we are looking forward to the innovation. The next ones, I think, are account aggregator. Account aggregator makes it so much better for us to personalize. You don't have to have the same platform for everyone. It can be a different platform with things that he cares about on the platform, right? So I think for us, the way I look at this is a complete force multiplier effect. That's what digital economy has brought to us.
Certainly, noted your points. I have been working as a finance journalist, and in my time when I was working for TV, whether CNBC or even I used to meet all the brokers and all these financial analysts. The first complaint they used to have is market penetration is very low. Now the biggest complaint they have is itne sare log hai, how to find a next multi-bagger. I thought you will give some tips to them since everybody is investing. But okay, let me move to Ashish. Ashish, different demography, different market, different listed companies. I mean, how do you actually combine all this and give a better service to the customers? Because you do not know which customer is looking for what, and how do you actually serve him better?
Just to give you a background, I run CoinSwitch and Lemon. CoinSwitch is India's largest crypto platform, and Lemon is the newest stockbroking. So I have experience in both regulated and unregulated markets. I'll take a step back on answering this question. Earlier, what used to happen, say 5 years ago, right? There would be a lot of information asymmetry. So information will flow from top to down. People who are, say, HNIs will get the information very, very early, take advantage of that information to trade, make a lot of money in the market, and by the time information reaches to the bottom, the information has already lost the meaning. Has already lost the kind of gain a retail user could end up making, right? Now that does not happen. Through first the mobile revolution, then the internet revolution, then UPI, and now, a lot of information is now available at fingertips of a lot of retail users. So anything which is not just happening in India, but say abroad in US election, now yesterday the recession fear, now all that information is available to every one of the user. And they have now the apps which have made it simple to take action. And this information is now converted into action, which you'd see in the market as well. Now, retail users are not behind anymore. They are taking advantage of the market conditions. They are being cautious when the news is of caution and taking those action in between, right? What needs to happen from here on? One thing that has happened is obviously, the top tier cities are doing well because it's English, which is mostly, the language which this information is getting disseminated. But we also need to get to better language models to be able to serve the entire India, to bridge that gap of information asymmetry across India. And that, what I believe would be the next step in the evolution of fintech. Retail users making right choices by getting the right information at the right time, and platform like ours and many others making it easier for them to consume and to actionize these information. A quarterly result coming out, you don't have to go and read a 50-pager report. You probably have a ChatGPT equivalent available in the apps, which gives you a 5-point summary of how the company has performed, whether you should invest in it, if you were already investing in a company, whether you should continue to hold it, sell it, or what to do with it, right? So these information now being available, now better tools being built through AI blockchain, which will help you take action better, faster over time, with removal of the kind of language barrier that still exists, but I believe in the next 5 years, that would not be there
So
anymore.
crisp information to investors on what should be bought and what should be sold, what to buy and sell. So what should people buy today?
Right now, don't buy anything. Markets are bad. US recession, the news of US recession is out there. So market would be there would be a lot of volatility in the market. My personal advice to all of you would be to consume that information, not take any drastic action. Don't take any action under fear of the recession. Wait it out, understand your portfolio, whether you're a long-term investor or a short-term investors. Get out of your risky bets if you have any. And obviously, on platforms like Lemon, you would get analyst rating, a lot of information that we give very specific to those stocks to help you make better decisions. So maybe, choosing the right investment platform also becomes important in these, crazy times that we live in.
No, sure, Ashish. In fact, that was slightly a different answer. The common answer which I always got from the people when I used to speak to brokers is, market kyun gira? That was expected. Market ऊपर क्यों जा रहा है? Oh, it's a bull run. And अगर कल गिर गया, oh, it was expected. But anyway, Ankur, thanks for your patience, and you are an investor, right? So I have a very important question to you. First, आप कहाँ invest कर रहे हो? Which are the entrepreneurs you are betting on? Which are the sectors that you are betting on? And more importantly, how is the digital economy shaping up according to you? How are you making most of it by investing in it?
No, thank you for your question. So, as a platform, IPV, we are sector agnostic. The fundamental theme is good startups run by great founders available at good valuation. So to that extent, I will say it's a good time to invest in angel investments because, like you said, we have been in middle of a funding winter for an extended period of time, really controlling down the valuation, which is not necessarily a bad thing. And therefore, even in equity markets, I think the entry point, depending upon your risk appetite, is somewhere around the corner. So we continue to invest. We have actually become more bullish in our investments in last 6 months. I also run a VC fund now, which is like more of a follow-on, FISIS Capital, and we are investing there. Now, where are we investing from a digital economy? I think it's a great time to be an investor today in the digital economy world. As you mentioned in your introduction, we are seeing sectors and problem solvings that we have not seen. Like imagine 5 years back, nobody knew Gen AI, right? Today is a buzzword. I remember investing in a Gen AI company 3.5 years back, but we called it GAN, Generative AI Network. The Gen AI as a term did not exist. But now 10 minutes delivery, like you said, is possible. Cross-border payments are possible. We heard about gaming earlier. You are doing behavioral science. You are actually analyzing how somebody is shopping. And the 3 key sectors for me are AI. There is cloud computing, because there's a lot of movement that's happening there. And then anything that is related to digital payments, whether it is investing, whether it is consumption. I think all of these sectors, the growth has been exponential, but the science comes first. The product comes first. The products are there. They're revolutionizing. Investment advice that you are getting. You had to pay a lot of top dollars. You needed a Bloomberg terminal, and you needed all of that access. Today, you can just run a simple, question on a Grok or somewhere and say that based on the PE ratio of the earnings that have been released in last quarter, which are the stocks which are at a 52-week low or something like that, and you'll get the list. And then you can start looking at your investment journey. So I think, and then I read some crazy numbers that over the next 5 years, about $4 trillion of spending will happen in digital economies. Hopefully many of our startups will be the beneficiaries of that spend. The government is giving it a big push all over the world because it brings more and more investment into the organized world. Crypto and blockchain are not necessarily the evil words we have to consider. I think blockchain as a technology has a very, very, we had no broker earlier, and I think blockchain in real estate is a very, very big use statement. So I think an exciting world to evaluate opportunities across sector. I mean, the way digital the way technology is going to support many of these transactions, not just urban economy, but also rural economy. I'm evaluating a startup where you can, they are doing some very high level NLP, a dialect, not just language, a dialect to text translation to help you shop online by just speaking to your app, right? Because that's part of the world that is missing from the e-commerce world. So I think a good exciting time to be an investor and looking at this sector.
Quite interesting, in fact. The whole 10-minute delivery and models are so famous. And when you speak about digital transformation, I remember one line. Fortunately, I had an opportunity to moderate a session with Mr. Nandan Nilekani. He said a bold line which says that we are transforming from prepaid to a postpaid economy. I think that was a beautiful line. So you mentioned about 4 trillion of economy, specifically with digital investments. My next question to all of you specifically is about the same, and this is common question to all of you. For the time being, I will not repeat it. I will just read it out for everyone, and I will start with you, Paroma. The question is, as we are heading towards, $10 trillion economy, we are also trying to become the third largest economy very, very soon. Which will have digital as an integral part. How do you see the digital economy specifically in next 5 years? Because in the 5 years' time, we will be a $10 trillion economy, is what the analysts and everyone says. What changes do you see specifically in your domain?
So this $10 trillion ambition, I think, first of all, I'm one of those who has confidence that it's going to get realized. And out of that $10 trillion, they're saying $4 trillion is going to come from digital. And I think that is going to be a reality as well, if not more. I actually think it's a fairly conservative estimate. And within that, from my domain, I think, again, they are predicting about $1 trillion plus to be generated from the fintech ecosystem in the form of lending, investments, etc. So that is another thing that I think is going to happen. So the $10 trillion of digital is certainly going to be powered by payments in the digital ecosystem, and another out of that $1 trillion specifically generated through additional digital lending, digital investments, etc. So in terms of sheer numbers, that's something that I feel pretty confident that we're on track to get to as a nation. In terms of consumer behavior, there are trends which I think are going to also materialize in keeping with that. One is hyper-personalization. It is just about started right now, but still products are given in buckets. There's a type of product which you as an individual are taking. But I think with AI and Gen AI that he referred to as well, we're getting to the stage that we can customize every single product to every single user at any point of time. Whether it is the loan from your interest rate to your tenor to your fees to your terms, to investments, it is getting hyper-personalized, and I think that's going to become a reality as part of this. The second thing, I think, globalization and cross-border is also going to become a reality. Up to now, a lot of the economies have burgeoned within their own country. We've also burgeoned a lot within our own country. But payment rails, for example, like we have UPI in India, there's PEX in Latin America, et cetera, and there are conversations around these coming together to common standards. Like there has been ISO certification, which has been an internationally accepted standard across the world. I think payment rail and tech stack standardization is another thing that's going to happen, which is going to make it a lot more seamless to interact across borders, whether it is sending money, receiving money, making payments overseas for services consumed, receiving payments for services delivered, in making investments overseas, making investments in India for overseas investors. I think a lot of those are going to evolve as well as a trend. And the next thing that I think is going to change to enable all of this is a lot of regulatory action. The overall tech stack and jam trinity that has powered all of this over the last decade plus, I think we're at another inflection point, and in the next few years, we've just seen a ULI, a lending equivalent of UPI, get launched. Account aggregator, he spoke about how that's being leveraged by multiple companies. I think a lot of these are going to evolve into a lot more regulatory action to power it in this direction. And another angle which is just beginning to get introduced, and I think which will grow in keeping with this digital economy, is sustainability. A lot of companies have just focused on customer acquisition and top-line revenues and are beginning to focus on profitability. I think the conversation's beginning to shift to how can this be delivered in a sustainable manner. People are becoming conscious of their carbon footprint, et cetera, et cetera. And I think that's another trend that's going to happen as the digital economy marches forward at the rate at which it is.
Yeah, so I think I would voice a lot of the stuff that Paroma just spoke about. I think what's happened is, yes, a lot of progress has been made in terms of the digital economy by a lot of fintech players. But I think over the next few years, you're going to see a lot of more traditional players also come online and digitize their services. So, for example, and you touched upon remittances. So, on our platform, I think we started offering the ability for people to invest in US stocks, which involves a lot of remittance via your bank. Now, 2 years ago, for me to do that and go to a bank and work with them to offer that, it was significant effort, right? Because these processes weren't digitized. As of today, I can see the whole landscape shifting very, very quickly. Today, all the banks have their processes digitalized. Remittances flow smoothly, not smooth enough yet, but it does flow much more smoothly, right? So I think a lot more needs to happen on the fintech space to adopt and embrace this digitization. However, I think the big game changer in the room, and probably Amol, 5 years from now, you'll be hosting this conference, you'll be talking only about AI, right? How has AI changed your business? But I think the big one in the room is AI.
5 years later, Amol will be hosting a panel with holograms of ours digitally talking to holograms of you in the hall. I think that's going to happen.
Possibly, yeah. But I think the big game changer is AI. Even in our business, I think Ashish also spoke about this on wealth tech. It just enables you to give accessibility to the customer in a very easy and simple manner. So when Reliance announces a result, nobody understands what those numbers are. How do you make it simple for them to digest? Okay, you have a stock of Reliance. I'm going to give you a simple explanation of what Reliance is doing, what Reliance's result has done. And hence, let's look at it 5 years from now, you'll be able to start giving projections on where the stock might go, what the company's future plans could be. The pervasiveness of AI is going to become even more profound year on year from now. So I think that is the route which we're going, and I would bet. I think anyone who's not betting a lot of chips on that is going to miss out.
Ashish?
Yeah. So let me cover this answer not as an industry, but as a software developer or as a technologist, right? So to get to 10 trillion and where, maybe digital economy is contributing to about $4 trillion, let's look at where we have come from. The entire internet was developed somewhere else. We became the services hub for the entire nation, or for the entire world. Now we have moved on to products. We have amazing products which are out in India, creating digital economy, be it UPI, be it many other digital products helping user do everyday tasks much simply. I think the next innovation would come in the form of creating infrastructures. I personally believe that a lot of our digitization today goes to the infrastructure which are built outside. If you're running a company today and spending $1 million to acquire users, probably 90% of it is going to Google, Facebook itself. Running on Amazon, the next probably 50,000-60,000 is taken by Amazon, and you're left with $20,000-$30,000 at the end of it, right? So how does India grow from here as a software superpower is by creating infrastructure. And I think AI, blockchain gonna level the field. We were behind because our technology was a bit behind. US took the advantage there. But now with AI, blockchain coming into the picture, it is a level playing field. Anyone can now create infrastructure layer, create the next Google, next Amazon, next Microsoft. And hopefully in the next 5 to 10 years, that comes out of India. And India not just creating products and digitization of the daily work that we do, but also that digitization is powered by the products, the infrastructures that are built in India. And that's where I believe the next level of growth lies in the next 5 years for us, which equates the entire industry and create India as the software superpower itself.
Super, very nice. Ankur?
Yeah, no, I'll keep it short. So what I'll say is there are two facets to my answer. One is, technically you can say I run a wealth tech firm as well. I just help people invest in private investments. And I think digitization, digital economy has allowed more and more people from all over the world to participate in the India growth story. But I think something bigger is happening, and something that my co-panelist alluded to. I think what is happening is that the investors in India, after making that initial success, a lot of us have made some humongous exits, our 80x, 100x, 1000x kind of returns. And we are no longer looking to back, we are no longer asking the question to show us a Western proof. So it's no longer that give me the Uber of India or the Amazon of India, right? Or the DoorDash of India. What we are asking is, are you building a unique technology? So if the investment is in infra, you now will have the investors who are willing to back, revolutionary products which are solving local problems. There is going to be government support, which is going to, create a level playing field, maybe even provide some advantageous positions for people building it in India. So a very exciting world to be a stakeholder in this economy as we look forward to its growth.
Fantastic. I think those were some remarkable thoughts. And I will have to stop here because the time is up. Wish I could have some more time so that perhaps I could have taken some questions, but we are running late, so I will stop here. I think my one thought is generally, being a journalist, we don't give our views, but my observation is we should also focus on this question, which I also wrote an article very recently. Where is India's NVIDIA? When we talk about Wipro, Google, Facebook, and I mean, UPI is great, DPI is great, no doubt about it, but I think we should also start, when you're marching towards a $10 trillion economy, we should also think about where is India's NVIDIA, if not today, maybe after 10 years. That's it.
If I can just very
Sure.
quickly add to that thing, if you go back and you say that, okay, I'm going to launch something which will need a 10-year, 12-year gestation period and I need $5 million. Imagine Jeff Bezos raised $1 million for Amazon when nobody knew what internet is. But you need that kind of ecosystem to support that kind of tech and development. I think we are getting there. So your next NVIDIA hopefully will be soon.
Very good. That's a great note. Thank you so much for listening to us very patiently. And thank you for those remarks.